Happy Sunday, elite traders. I hope you're all enjoying your weekends and looking forward to the week ahead. It's that time of the week where I show you my watch list, I show you what's going on, and give you some potential ideas to start making some money in the markets. On the watch list this week, we have the New Zealand dollar, we have the euro dollar, the euro pound, the dollar Swiss, the dollar NOK, and the Australian dollar against the US dollar. So we'll start with the Australian dollar. You can see I actually took a loss on this. I think it was a week or two ago now. I was bullish and my bias is now flipped to bearish. So I'll explain the reason behind that. We've got high US rates continue to pressure the Australian dollar despite the RBA's tightening bias, Australia's persistent inflation problem, and the wide US-Japan rate spreads weigh on the AUD. Additionally, China's weak growth impacts Australia's commodity prices. So overall, very bearish on the Australian dollar. I actually stand quite bullish on the US dollar at the moment. And I'll explain that as we go forwards in the video. So let's discuss about the technicals. Technically, we are at a really nice level of previous sort of resistance here, turn support. And now we've broken this level and this looks very much like a typical break and retest. The only problem I have with this is that price is very oversold, in my opinion. This is a very cheap price to be selling at. So I would like to see a retracement. So my plan of action here is to potentially, and this is obviously at market open, so I don't really trade market open anyway, so I might not get in here. But hypothetically or theoretically, if the price doesn't really change on market open, I would take a very low risk position here with the knowledge that is likely to get stopped out if we do see this pullback. The second option is this one. This is my more favorable idea. It's a 50% pullback from the high up here. Obviously, if we draw the fib from the high to the low, we get a 50% move right here. And this lines up with this previous level of support. You can see it through here. We do have the moving averages that have crossed to bearish as well. So I would like to enter at a 50% pullback. Stop loss above the cross of these moving averages. This would also possibly help the RSI become overbought. And that would be a great confluence to get into a short position. Now for take profit, not aiming for anything too crazy, just to probably this double bottom down here, and use that as our take profit level. So that's the two ideas at the moment. Of course, when I do take trades, they are sent to Discord. So if you do want to follow my trades exactly, you can join the Discord. Link is in the description. Moving on to the dollar NOK. Now, I was speaking about this pair for a long time, probably 1 to 2 months ago. It was on all of my watch list videos and all of my streams, and then I suddenly stopped talking about it. Now, the reason I stopped talking about it is because price wasn't at a favorable place, and this is a long-term position. This isn't something I want to sort of day trade or even short-term swing trade. This is more something I would hold on to for possibly the rest of the year, maybe even into 2025. However, I'm now interested again because we are at this level of resistance on the weekly time frame. We do have this sort of, I think this is an ascending triangle, is what people refer to this as. But the economics are bearish. So if I refer to my economic sheet, which I can show you briefly here, if you're quick, screenshot it. But essentially every week, I put together this sort of heat map, essentially, or an economic board. And what I do here is I list everything about the currency that's currently relevant or may be relevant in the upcoming near future. Then I use this to then plan some trade ideas. Now I do have it to the bottom, but I can't show you that because that's proprietary information that I've sent to the Discord. So the USD NOK. The NOK is the most undervalued currency in the G10 space. With a stable global risk appetite, the NOK could continue its recovery, supported by strong domestic fundamentals and a hawkish Norges Bank. So, sounds great. I mean, it's a very undervalued currency, as I just said. Price is currently pretty high. If we look at sort of the long-term time frame of this, price is very expensive. So, I do foresee a fall. However, again, in terms of targets, I don't really have one. This would more be a case if I would trail my stops down on this one. And for an entry, I'm looking to enter pretty quickly now. I'm looking for just a slight push back into this level of resistance. And that would then allow me an entry into this market. Now, stop loss would have to be above the noise up here just above this resistance, these wicks. So we'd have to go something like this. This is, again, quite a long-term trade. So if you're not looking to get into long-term positions, you can fast forward through this bit. However, long-term target, I wouldn't mind coming back down into these levels here. And this would be sort of a great exit point. I'd be happy to take profits here, and we could get, anything from sort of 1 to 5 to 1 to 8, really depending on where your stop is and where your entry is. But this looks great to me. So I'm definitely watching this one very closely now. And hopefully it's pretty quick to execute. So we'll see. Now, next one. Hold on, I'm just going to take a drink. It's Sunday, so drinking I think you can see that, Birra Moretti. It's a good one. If you haven't tried that one, definitely recommend it. If you're 18 or over, or 21, depending on where you live. Anyway, moving on. We've got the dollar Swiss. Now, the dollar Swiss has had a great run to the downside. Really, really good. So price is pretty cheap at the moment. Now I am looking to get long. The bias was bearish, and I was short actually on this pair. And I'm showing you some losses on this stream, which makes me look bad, but it's just transparency. Now I can't remember the exact details off the top of my head, but I was short somewhere like this. It was very, very similar to this. So I had the idea right, and I just got stopped out very, very slightly here. And missed this move, which it hurt, to be honest. It was one of those trades where it was like it was painful to look at once the move had happened that I was expecting. But anyway, the reason I'm bullish now is another rate cut and dovish forward guidance from the S&B have halted the CHF rebound. Persisting political risks in Europe and global uncertainties could challenge the Swiss in the near term, while lower inflation and differentials will depress the Swiss in real valuations in the long run. And again, pairing that with a strong dollar, it makes a lot of sense. So we essentially have a weak Swiss and a strong dollar. Gives us a great recipe for a bullish market here. Now, I wouldn't be looking for a crazy move because the Swiss is obviously a safe haven. It's a stable asset. It's not something that I want to start holding positions on for too long. It's not. It just isn't, because the Swiss can recover quite quickly. It's not something that will just suddenly drop off a cliff, really. Even if we do see some short-term weakness. So I am looking for sort of a very similar move to this. Now, this is counter trend at the moment. However, I do quite like the look of this. Now, technically, this does look like a good short position because if you guys watch my content regularly, you'll know I love these break and retests. And this is what we've had. We've had this break of the previous support, and this now looks like a retest. However, obviously, I'm a fundamental trader first, so I have to trade what I see in the economics. Now, if we look on the weekly time frame, this is where the long position gets backed up a little bit more. We can see we have this really nice level of structure throughout the weekly. Sorry, just give me 1 second. Okay, so yeah, we've got this really nice level of structure. We had a huge wick to the downside on this weekly candle, which signals to me that we could continue some bullish movements here. So moving on, we've got the euro pound. Now, this is one that I am the most excited about, or most, looking forward to taking, because I think this is probably the most high probability trade at the moment on the list. Now, I would be looking actually to get in pretty quickly, almost immediately into this market. So again, if you want to follow this trade, you want to be alerted if I take it, or if I don't take it, then you can click the link in the description to join the Discord. But yeah, looks perfect. So we can see here we had this market gap that was quite quickly filled, respecting this 200 moving average really well. You can see it's not really broken. And when it did break, it was because we filled this gap, retested this level, and then continued to the downside. We did take another short position down here that was stopped out, unfortunately, so it was a bit of an early trade, but still looking to capitalize on this market. So again, referring back to our sheet, the economics, the UK economy could benefit from political stability, and if a majority Labour government is established, which it has done, pursuing a policy of gradual reapproachment with the EU. Additionally, the beginning of the Bank of England easing cycle and the ongoing recovery of real incomes could support domestic investment and spending, boosting the GBP against the euro. Now, that sounds great. So this looks like a really, really nice trade to take. It's probably, in a perfect world, of course, this looks like a great trade. Now, I could be sat here next week saying this has been stopped out, I was too early or, too late, whatever. But at the moment, without hindsight, this looks perfect. So yeah, looking at this one now, what we can do is also see if the fib helps out here. So it'd be from the high to the low. The fib is slightly higher than I would like, so this 50% pullback is actually a bit further up here. So we'll see. Again, I'm not looking to get in as soon as the market opens. It's just possibly one for Monday to Tuesday sort of time frame. And then we'd be looking for the fib extension down here. So this could be a nice sort of 1 to 2, 1 to 3, maybe a 1 to 4, depending on your entry and stop, of course. But yeah, this one looks really nice. I'm quite happy to take this one. Now, euro dollar. Now, there's been a lot of people, I stream on Trader Nick's channel quite often. It's normally 1 to 2 times a week, maybe 3 times a week. And on that stream, I always get asked, what do you think of euro dollar? And I'll say I'm bearish on euro dollar. And then the comments come in and the chat comes in, oh, euro dollar's bullish, da, da, da. But technically, sure, looks bullish. We just bounced off the 200. Overall, we're in an uptrend. However, if we just sort of zoom out, we've got this high here, come back down, created a lower low, and potentially now coming to create a lower high. So technically, could be now transitioning into a bearish trend. We also have this fib level. So again, from high to low, we've got the 50% level throughout here that lines up with the sort of consolidation we saw, and actually lines up with this sort of resistance throughout here as well. Now, going on to the economics, we have the euro could weaken due to ongoing political risks in Europe, particularly if there is a contagion to other fiscally weak Eurozone members. The ECB is expected to remain more dovish than the Fed, and potential global risk aversion due to US political and geopolitical risk could enhance the appeal of the USD. So essentially, the US dollar could act as a safe haven compared to the euro. Now, again, I was been talking about the euro dollar for quite some time because I was shorting it up at this weekly high. I've been shorting and made some pretty good money off that. I was sort of dollar cost averaging it, and we did see the huge move to the downside. And the Credit Agricole long-term target for the end of the year is actually down at these lows at the 1.05 level, which is something to keep in mind. So, for the rest of the year, we could be looking to shorts into this sort of area down here at this weekly level of support. So to me, it looks like a really great trade. And again, if the crowd is long, you want to go against the crowd, generally speaking. So I'm more than happy to take this one. And again, I think this could be a huge trade, and it could be a high probability trade once we start seeing this sort of fib level get tapped into. Now, the New Zealand dollar is a tricky one. Overall, it's bearish. No one can deny that this is a bearish market. However, we could potentially get a very small long position in. And the reason is, again, I'll refer back to my sheet. So while the New Zealand economy is facing a double dip recession and softening labour market, the move to natural weather conditions from El Nino is positive for the New Zealand. Although China's weak growth weighs on the New Zealand exports, the overall outlook could support a moderate recovery. So essentially, I would take a very small position. Again, this is counter trend, so it's not my favorite, but it's something I'm willing to take a little trade, a little stab at and see what happens. So I'd be looking for something very small, so just sort of a level throughout here, quite a tight stop loss, something like this, and just go for a 1 to 2, and then potentially again another little stab at a short position here and sort of trade this both ways. Now, that's something I very rarely do. If you ever watch my content, you'll almost never see me do something like this. But in this situation, I think this is actually not a bad idea. So yeah, we will see. Again, I'll have to update you next week on the future positions for this. But just for this week, short term, I'd be looking for that bullish move to the upside, just for a little correction and to capitalize on some very minor sort of economic data. So that's it for this week. As for open positions, I am in one that I can show you here, which was NASDAQ. Now, NASDAQ is actually looking great. My stop loss is much larger. My stop's down here. Now, the reason I've got this is a starter position. So this is what's called a position building, what's called position building. Now, I was explaining this again on Trading Extreme, but position building is more of a, I'm going to use this word loosely, but more of a professional approach. Now, the reason I say that is because when you are trading large money, and when I mean large, I mean, hundreds of millions, it's not quite as simple as entering a position with, 10,000 lots, put your stop loss at X level and a take profit at X level. Normally, they will put multiple positions in and sort of build a position over time. And that's essentially what I'm doing with NASDAQ. So I don't short indices. That's something you guys should know, again, if you watch my content. So if we look, why would I want to start shorting this market right now? We have hit a 50% level. If we draw again from low to high, we're just rejected 50%, which is quite a major thing, especially on from such a large time frame. So yeah, essentially just starting to build some long positions here. This is very low risk. So you can see if this is only a 1 to 6.9 roughly. And I took this at almost like 0.2% risk. So it's essentially nothing. So if this does just suddenly plummet down and it stops, I don't care. It's not any money off my back really. And then if we do drop down to sort of lower down around here, I may enter one more position again at low risk, and that would be it. And then again, if we start coming up, I'd scale in and start building my position this way. But for now, I'm sat on a very small long position with a very wide stop to just see what happens in this market. So if it does start rallying, at least I'm in at a low price and I can start scaling in. However, if it does drop, again, it's a very low risk trade, so I don't really care. Crude oil, I had a nice personal trade on this one. You can see it here. Just missed our take profit, so I did manually close. This wasn't a signal because I had a really bad trading month in July. So I was sort of taking a break from sending signals for the rest of the month, and I saw this setup very quickly and decided to take it. More of just a personal trade, just to offset some losses that I incurred, again, personally on some yen pairs. But yeah, really nice trade here. Very simple, really, just playing on technicals from a 50% pullback. We had the moving average cross, almost a retest of this level. So yeah, very simple stuff. But again, I said it before, I'll say it again. If you want to follow my trades and learn how I trade and learn my sort of view on the economics and all that sort of things, feel free to click the link in the description. You can join our Elite Traders Discord. But yeah, I've got a pretty good video coming out on Tuesday. It's a reaction video. Never done one of those before, so make sure you tune in for that one as well. But that's it from me. I hope you all have a great week. And again, hope you're enjoying your weekends. I will see you very, very soon. Thank you for watching as always.